Well, emerging markets, or BRICS, India's central bank kept rates on hold while analysts, they've been looking for a cut of at least 25 basis points. The Reserve Bank of India is pointing to stubbornly high inflation as the key reason behind this decision. Data show that India's CPI was 10.4% higher in May compared to a year ago. Fitch Ratings cut its credit outlook for India to negative from stable on the back of this news. Alpesh Patel is still with us from Profinium Partners, as is Bill Blaine, our guest host from New Edge Group. Alpesh, I've been talking to quite a few people about India recently, and many are arguing that India shouldn't be part of the BRICS anymore because their economy has been heading south, or policymakers in India have been making decisions that are causing people to think of India as heading south. That might be a better way of putting it. Do you think that there's a rhyme to this reasoning?
I just saw Jim O'Neill in your green room a few moments ago, and I'm sure he's one of the ones who'd say, look, let's get over the BRICS thing already, because as you know, there's a whole other story going on. If we get to the substance of whether or not and where it belongs, well, it is a $1.7 trillion economy, and it's still going to be growing at about 5%. The problem they've got is 25% of that GDP comes down to the agricultural sector, which itself is dependent heavily, of course, on the monsoon rains. And you'd think a developed economy, which isn't quite yet, wouldn't have to be so dependent upon rains and the will of the gods rather than of its entrepreneurs and business people. But those big figures, 5% growth nevertheless, even though it was targeting 8%. The major problem is the government's tired, they're lacking policy initiatives, and they're making U-turns, which is halting inward investment. And what they've done with tax, with companies like Vodafone, means if you're an investor, you're going to sort of put your hands up and say, well, I'm a bit cautious.
Yeah, deciding to backdate taxes, right? Or charge.
Yeah, retrospective tax legislation. They call it something else, but we know what it is.
And I think that this is all backed up by the fact that they were expected to act, and they didn't. And that, I think, just highlights your comments about, well, what next?
Now, that's partly a reflection of the fact that they've got elections in about 18 months. And for inflation, read populism. For interest rate cuts, read we want to help the rich. Because interest rates don't affect the vast majority of individuals on the street, because they don't have credit cards, they don't have mortgage rates to worry about. For them, it's inflation which is of concern, food inflation in particular. And what actually the government's doing in not helping them is it's maintaining minimum price levels on a lot of agricultural foods, which keeps farmers well off, which is fine because they do actually need help. But the person who isn't a landowner, who doesn't have any of that, they end up having to pay ever-increasing prices, which the government is trying to then, through the other hand, subsidise, which is why it's got budget deficits and getting downgraded. It's an absolute mess in one regard. It's good for private equity firms like ours because we can stock pick. This is a good time for us.
So what are the kind of opportunities that investors should be looking at in India?
You know, it's the same old thing you look at in every economy, and it's what Warren Buffett says. When things like this happen to an economy, you see who's been swimming without any trunks on, as it were. And for us, it goes back to discount cash flows, because we're looking at 5 to 7 year investments. So we didn't get in at the overvaluations that they were trying to sell us on the basis that, oh, look, we're growing at 8%, you've got to pay us over the odds. And we just kept saying, no, we're not going to be that stupid. Whereas, unfortunately, other funds, that happens in every economy, they get itchy fingers and they pull the trigger too soon.
Are you a fan of emerging market exposure at the moment?
I do think there is certainly a much larger role for people to look at the emerging markets, but then I think you run into two problems. And the first is you've got to know the point of entry, and that means having that knowledge and having the ability to understand a whole raft of new markets, which will necessarily be different. And I think the second issue is that emerging markets will never be able to take the kind of scale that we need to see come out of the depressed, westernized markets and go into new opportunity markets. And we've seen that very clearly in emerging markets, but also in the corporate market. As government debt has collapsed over the last couple of months, corporate debt has tightened to unfeasibly tight levels. And I think that is the risk that many people see with the emerging markets as well, and that isn't fully discounted. But it's largely a question of the knowledge.
I do think your point on food inflation is very interesting. I mean, it doesn't feel like food inflation is gone.
No, not at all. When you're looking at, and I hear this from people on the street, I'm there next week with the UK government. It's great news for Europe, by the way, because with the UK government, we're looking to get investment from Indian companies, cash-rich Indian companies, to invest into Britain, which they are very keen to do, because we've got all the infrastructure they don't have over there, and they've got the cash.
Alpesh, thank you very much. Alpesh Patel, principal from Profinium Partners. And